me, Saul, and in this video I'm going to start the watch list for the week of April 4th, 2011, and also, as you can see by the text on the screen, I'm going to go over the rules of how these trades should be watched, okay? Because I don't know if you're taking these trades live or you're just watching them to see what they do, but keep in mind, these aren't recommendations, they're just my analysis. But this is how I analyze them as they're unfolding, as the trades are unfolding, okay? First thing has to do with entries. Gaps above or below the entry that I point out, it stalls the entry, all right? So if I'm looking to go long, and we, above, let's say it's a Friday update night, and I add a stock to the list, and I say, okay, I'm looking to go long above Thursday's high. Well, what happens if we gap up above that high? We, even by a couple of cents, 5, 10 cents. Well, to me, that stalls the entry. Now, there are two things you can do, and the same thing on the downside, right? If you're looking to get short and it gaps down below the entry, there are two things you can do. If it's a small gap, 5 cents, maybe even 10 cents, then maybe it doesn't matter. Maybe it's just a get in at the open, if you want, all right? But what I like to do, if it gaps above the entry, is I like to use the 10 a.m. Eastern Time bracket. So what I like to do is, if there's a gap and, in the direction of what I'm looking at, and the stock trades in that direction, and then it pulls back, I will watch that new high or new low before 10 a.m., and I'll use that as the trigger, okay? Now, I'm not a big fan of chasing these stocks if they make a big move early, okay? So in other words, if they make a big move before 10 o'clock, then most of the time I'll just say, all right, go to an intraday strategy maybe on the stock, or look at different stocks, or just not worry about it, all right? There are plenty of fish in the sea. Okay, you've seen me construct the list now 2 weeks in a row. This will be the third week of me doing this, okay, on these public videos. And you see that constantly rearranging, changing, adding, subtracting is part of the list. So there are plenty of fish in the sea. You don't need to get greedy and, oh, this is the one, I have to be on this one. Because you can get bit by a shark, okay, right? Or a piranha, or whatever you want to call it, swallowed up whole by a whale. So there's no reason for you to chase after a play that's moved so far. Yeah, okay, all right. Oh, darn it, I missed it. And, for those of you who watched my recap video, there was one of those stocks last week, FFIV, that I stalked all week and wound up making its move on Friday. But you just have to move on. I mean, and it's tough because, if your next trade is a loser and you missed a big mover, it's like, see, I picked the loser, but I can't pick the winner. You start doubting yourself. It's ridiculous. It's one trade, 2 trades, 200 trades in a career that's going to be thousands and thousands of trades, okay? And especially if you're successful, going to be tens of thousands of trades, right? You're going to do this for the next 25 years or whatever. So move on, all right? It's important to understand that. So if the entry moves away, or if the stock moves away from the entry, I just rather let it go. All right, so let's look at the stocks for this week. The first one is Research in Motion. Talked about this on the viewer request video, but it's a nice pattern here. Okay, it's sitting right on its 200-day moving average. I'm using Friday's boundaries as a potential entry. Okay, once again, if it gaps up above the high or gaps down below the low, I'll probably let it go, or I'll probably wait to the 10 a.m. bracket. That's the first half hour, but RIM is the first one on the list. AZO. Okay, AZO has a pattern that I like to look for, which is, if I keep squishing it, you're never going to see it, which is a small consolidation, okay, right near the highs or the lows, right? But in this case, it's the highs. And I kind of form fit that triangle, and you probably better off looking at it like this. But I'm watching Friday's highs here. This is a valid mini coil, I call this. Okay, it's a nice tight little coil. right at the end. So, this could be set to explode here and get above these recent highs, maybe head for 13. Wow. You can tell it's Sunday night. Maybe head for 300. All right, but not saying it's going to get there by any means. It's just above all the moving averages. A nice coil here. Look at this. The longer-term trend is nice and strong, as evidenced by the 200-day. So I'd be watching this to see if we can get some upside, be putting a stop if it triggers right below Friday's lows. If it goes down instead, hey, you move on to the next stock, right? I hope that part at least I've been getting through, right? That, okay, I'm looking for it to go higher. Oh, it's going lower. Okay, see you later. I just look at something else, right? Okay, A&R from last week. I'm going to be watching this one carefully. If it gets to last week's highs at 60.85, I'll be moving stops to break even though it's only up about 50 cents. And I'm going to look at this for, a nice dollar move to take a piece off, and then stops will be already at break even. So, but if this gets a dollar move or more than a dollar, if it gapped up, is another rule, right? That wasn't written on the first chart. But if this were to gap up and gap up over a dollar from our entry, right? The entry was 60.34. Then I'd be looking to just take a piece off, right? Nice gap up, and even a gap up above last week's highs, right? Even if it gapped up here and it was trading over 61, okay, take a piece off. Nothing wrong with taking profits. And I'm not a big believer that there's a famous saying is that you can't you can't go broke taking winners, right? You ever hear that one? You can't go broke taking profits. I don't agree with that. Okay, you can go broke very quickly taking profits. If your profits are outsized by your losses, or if they're the same and you're a 50% trader, well, you know what? You're going to lose money because the commissions are going to get you. So, to me, I'm not saying just look at this one for a little quick move, but if you get a nice gap up or a big opening, nothing wrong with taking a piece off. Right? There's a lot of these stocks. Okay, so just something to keep in mind. So that's A&R. UIS from last week, very nice one. Okay, I'm watching Thursday's highs, 31.69. So break above that would be a stop out. This one again, if it were to gap down or gap down to the 30 area. Okay, if this one tagged the 30 area, even on a gap, or if it just traded down there, I'd be moving stops very aggressively. Okay, this was a real nice entry on this low. So if it got to 30, I'd probably be locking in a dollar with a stop and seeing how low it wanted to go. But I definitely would not lose money from this point on with UIS. Let's look at Anadarko Petroleum. Nice little coil up at the highs here. Okay, if this one were to break, right, it's above these last highs here. So if this one were to break, be looking at potential trade up to 90. And then if it broke 90, they say, as 90 comes 100, right, or whatever. But I'd be watching this one real carefully. Nice coil right above the moving averages. Okay, NCR. Nice tight coil here. And, these are the type of patterns. These are the type of patterns that usually can lead to a really nice dynamic breakout. And the risk is there, right? It's not that big here because you're looking at probably going to want to put it above these highs. So what do you got? That high is 1897 and that high is 9. So you're looking at a 1904 entry with an 1871, take a couple cents off, so 1868 stop, right? So, you got, that's not that big of a price stop. And if this thing goes, right, you're looking for a retest of these highs at 2062. There'll be minor resistance along the way, but trail stops. It makes 40, 50 cents. Trail stops to break even. It gets $1. You may want to peel some. It gets 80 cents. You may want to peel some. Nothing wrong with when your risk equals your reward, taking a piece off. But this is a nice little coil here. So watch above these highs here, right? This high is 1903, so you want to watch a move above that. Okay? That's NCR. Then there's Merck, M-E-R-K, Mercer International. This one has a nice little coil here. Once again, small risk as far as price goes. This one trades on a little bit light volume, right? Let's look at what the intraday chart. Whoops, looks like. Okay, not that great, not that strong, so you have to be careful on this one, right? Nothing wrong with going smaller size, but you're looking at an entry 1371 with a 1351 stop, maybe 1341 stop, right? 30-cent risk. So how much do you have to make before you're happy? You're risking 30 cents, you make 50 cents. You know, you're up 180% or whatever on your risk, right? 170% on your risk, whatever it is. You know, just keep that in mind, right? A lot of people think, well, it's only 50 cents. Yeah, but you risk 30 cents on it. Okay? And then finally, UDRL, which was the stock that had all the notes on it. Right? Bink. Watch this one here, because this is a nice high-level coil as well. Right? Not the thickest of thieves, as they say, not the thickest of stocks, but if this one got going, you know, it had the potential to retrace more into this big impulse down. Okay, there's a monthly chart. And I want to leave these up in case I have to reference them again. But you can see here it's right at 38%. The next move would be up to this 1260, which would be 50% of this big swing. All right, so just something to keep in mind. And that's it. 8 stocks, which is right in my wheelhouse. I like having less than 10, believe it or not. And of course, we always add to them and take some off, etc. So, any questions? Feel free to write me at this email address. This is my YouTube channel, and this is how you view my blog. One more video to come. I'm going to do some currency analysis, so enjoy this, and I will speak to you in the next video.